Good morning, traders. It's Wednesday, December the 11th. Taking a look at the charts, we've got the SP 500. You can see here the market kind of hanging on to the 20-day and the 5-day moving average. Could be forming a little bull flag here. At this point, it's still trading under the recent highs, and we're waiting to see if the market can pull it up and break this previous high that we saw from a week and a half ago. Or is the market going to roll over and start a second wave down to break this low here and kind of cleanse the market for a potential much larger breakout to the upside? So we're going to find out today about the Fed, if they're going to change the rates, and it's going to shake things up for sure going into the closing bell around 2 o'clock and beyond, and that'll probably affect with the equities, bonds, the dollar, metals. It's going to really shake everything up. Now, if we take a look over the chart of bonds, you can see bonds are holding sideways here. They are in very similar pattern as what we've seen in gold, where gold had this beautiful and bonds rally up, consolidation, another rally, consolidation, another rally, consolidation. Overall, it's in a large consolidation phase. Eventually, when the equities market starts to roll over, we are going to see bonds and precious metals really start to pick up. Now, if you take a look at the chart of gold, you can see how it's a very similar pattern to bonds. We got the rally up, consolidation, we had a rally, consolidation, rally, large consolidation. Overall, this here is seen as one big bull flag. This here is seen as another big bull flag. You can see the size of the moves from previous patterns. So there's a lot of upside potential if and when the equities market rolls over and we start to see money pile into these safe haven plays. Now, if we take a look at the gold miners, similar type of price action, starting to show a little bit of life here in terms of it's starting to push and make some higher highs and higher lows. We've seen the market go up, pushed up. It broke this high here. So we do have a higher high, and at this point we still have a higher low, but it could still be working itself out with a little bear flag. Could come down some more. Overall, we usually want to see a break of two previous highs, so we do want to see the market eventually rally and break this high over here as well. Once you've broken two previous highs, it usually means the momentum has fully shifted and it's not a short-term kind of shakeout and pop to the upside. Now, if we look at gold miners, they have done just that. They're leading the way in terms of they've rallied up. They broke this first short-term high. They broke this second high over here, and now they're pulling back, and they might still pull back and correct a little bit overall, but the overall momentum, you look at these lows, they are starting, it's a rounding formation starting to work itself higher, and we could see the precious metals sector and bonds as well build this second half of this base and potentially break out for a nice run going forward in due time. At this point, it's in a short-term correction phase. It looks like a little bear flag, and we'll see if it can start to break and get up above this line over here for a new rally. Looking over at, let's look at energies real quick. Natural gas up 1.15%. Overall, the market, it looks like we are somewhere right in this zone here. We saw this over here, and we are right back into this pattern over here, where more or less we've seen the market have a rally to the upside and then a very strong sell-off. We had that over here, big rally, strong sell-off, big rally, strong sell-off, and then we came up through the 5-day moving average. We're doing that. We're about to come up to that again this week, and then the market flagged out and built a little launch pad for price to start the next rally to the upside. So that's what we're looking for here. Try and get some momentum, get above this 5-day moving average, hold our ground, and then potentially start to see the next rally in natural gas. Looking over at crude, down 0.4%. Again, it's holding at this upper range from these highs here, this rising channel. We are stuck in this kind of channel here, moving up. It's at the upper end. It does have a series of little bull flag here. It's holding its ground, much like we saw over here. And I think at any point we could see a sharp pullback. We've seen this happen multiple times through this leg, but we are into this 60 and this $59 per barrel area, very significant level where we've seen big selling step into the market. Overall, I think it's starting to get a little tired. We saw this candle push all the way up to around 60, and then it's pulled back. So it is struggling here at resistance. And once we do start to see a breakdown or potentially a topping pattern, we could get an inverse play and look for a move down in crude. Again, 51 would be the first key downside target. If that is broken, we're looking somewhere between this 42, 45 area for support for a big breakdown in crude. Last but not least, take a look at the U.S. dollar. Dollar is down fairly substantial this morning, down 0.3%. So it's kind of a big gap down this morning. We have the Fed coming this afternoon. Maybe the smart money knows what the Fed is going to do. Are they going to cut rates or give an outlook for 2020 that updates talking about rate cuts? If so, the dollar is already falling, anticipating potentially some rate changes to the downside going forward. And overall, we're seeing this move down, and we could see metals move up if we hear about a rate change going forward. So, anyways, that's it for now. We'll see how things unfold through the day, and talk to you in a bit. Bye bye.